These are in listen-only mode.
Welcome everyone to the AbleSys webinar. Ron here. I'll be glad to answer your questions, and we'll take a look at the charts. We'll look at the exact AbleTrend signals, where to buy, sell, what's your stop loss, and both the no trade zones, which keep us out of trouble, and alert us of an upcoming or potential erratic, sideways, or choppy market, which is great because we don't want to be trading during those times. And that's what's nice about it, because software is going to tell us, it's going to alert us that also, besides where to buy and sell. And then, of course, the sweet spots, which are the very low risk, high profit potential trades. And of course, that's what everybody wants. That's perfect. That's what you want. Doesn't mean they're always going to win, because I'll guarantee you they won't. But you'll have the odds so much in your favor that if you trade with the sweet spots, boy, you're going to do really well. If they've been working well for years now, and it's just not a lucky week or month or something. So this is a daily, weekly stock chart for traders who don't want to or can't be in front of their computer all day long. Makes sense. This is a Walmart chart. Certainly everybody knows Walmart. And nice buy signal back here. That's actually back in October. Look at this chart. Look how accurate this chart is. I mean, this is almost too good to be true. You can see we had the buy signal here, which was at about 81. Beautiful profit potential, profit taking spot at 101. Just 3 weeks later, all the way up. Notice how many times the prices pull back, hit the blue dots, and they stop, bounce off of it, and goes higher. Comes real close right there, bounces off of the AbleTrend support point, and goes higher. Same thing over here. The key to AbleTrend are the dots. It tells you where the support resistance is. Okay, hold on. Sorry about that. A little technical glitch. Okay, great. Now we're good. Okay, sorry. Yep, that should be good. Okay, I'll start all over. This is Walmart daily, weekly chart. Thanks everybody for jumping in on that, because everything was looking good on my end, but I had a little glitch there that I fixed. Okay, great. So we've got the buy signal here, and what I was saying was here are the support points, the little blue dots underneath the prices that are blocking it from going lower. What it means is stay in the trade. You're safe. You've got some nice protection there. The blue dots are telling us you don't need to get scared. I mean, if you're happy with your profit, obviously it's nothing wrong with never wrong to take the profit, but you can stay in the trade if you got the blue dots there, because they're support. Doesn't mean you can't take half off. You can. We don't tell anybody how much to trade or anything like that, but the software is just a really accurate guide. I mean, and you're not going to get these. You're not going to nail all these trades absolutely perfect either. It's just not going to happen. It's impossible. The software has no emotion. It just automatically has you in and out. You and I, it's different. I mean, we've got to make the trade, and even worse yet, we have to think about doing it. We have to have the discipline to do it. You have to have the patience to wait for the trades, and then the discipline to do it. That's where the hard part comes in. But if you can just pick up most of these trends, I mean, the bulk of these profitable trades, you're doing great. And the signals, technically speaking, the Walmart signal kept us in for 1, 2, 3, 5 months. Of course, you have sweet spots, when the prices pull back down to the blue dot, the bars go from green back to blue again. They bounce off of support, like you can see right here, and then it goes back to blue. Well, that just means that's a great place, very low risk place to get in. That's called a sweet spot, because you're getting in at a low price by way of where your stop loss would be, which would be at the next lower small blue dot. So even if you lose on it, you got maybe like $2 at risk there. Obviously, nobody wants to lose. But with $2 at risk and unlimited profit potential, I'll take I'll take that bet every time. I'm sure any other trader would too. So we're in at 81, and we're finally stopped out right there because we went under the blue dots for the first time. The first time it went under the blue dot. In 5 months, we got stopped out at 105, getting into 81. If you're an option trader, I mean, you just caught a piece of that. That's a big time profit there. And about, let's see, 1, 2, 3 months ago, AbleTrend had some pretty strong sell signals on Walmart. You see nothing but red bars, red dots, triple confirmation that it's going lower. All the way down it went, just kept going lower and lower. Never broke above the red dot till right there, where we were stopped out. But that's at like $90, and the signal come in up here at 100, actually a little more. We'll call it 100. So that's a really, really good trade right there. And again, it's the same colors and dots. It doesn't matter if this is a 1 minute, 3 minute crude oil chart, or if this is a British pound chart. It's the same. It's the same rules. I mean, it's everything's exactly the same, except for the colors and dots being in different positions. You read the chart and you interpret the chart, where to buy and where to sell, and when to get in and out, where to put your stop loss. The no trade zones, the sweet spot. It's the same thing. It doesn't matter what chart this is. If I told you it was something else, nobody, you would say, okay, yeah, I mean, it doesn't look anything different than anything else. That's my point. Now, sometimes they're real choppy, and I'm going to show you that next, because the choppiness is nobody can win, and that's the nice part. Whether you'll get a lot of no trade zones that way. There'll be losses for sure. There'll be some. It's not going to be 100%. I can guarantee you. But you'll at least, if it took away half of the choppiness, I mean, that's sometimes it's just as important not to lose as much as it is to win. And obviously everybody wants to win. Sometimes it's just as important knowing when not to trade, or just keeping losses small, because without AbleTrend, it could have been a lot bigger. And I'm going to show you that right now, because here's a perfect example of, the morning was fantastic. I'll show you toward the end of the day where it was choppy. Unbelievably great day today on ES. Here's your 1 minute, 3 minute S&P mini chart. 3 minute, 9 minute was great too. I'm a big fan of the 1-3 because most people like to get in and out more quickly, and it's just really been working well too. Been a great week actually. Oh no, one day Tuesday was just okay. I think we broke even on the day, or maybe even lost a few points actually. When I say we, I mean the software signals. Actually lost a couple points on Tuesday, so I like to point that out. I don't hide that. But yesterday was a real good day, and today was just a super day for anybody taking the signals today. No trade zone right here, pretty much right after the market opened up there. But we had just a beautiful triple confirmation signal right there. That's just a perfect buy signal right there. And if you missed it, or you just wound up, you're on the West Coast and it's a little bit too early for you or something, there's your classic sweet spot. I mean, the prices pull back down, the bars go from green to blue. I mean, you're almost right on top of the blue dot. Always wait for the bar to close. Wait for that blue bar to close, and then at the open of the next bar, you're in, regardless of the color. It's going to take a few seconds to place the trade and all of that. As it turns out, it was just basically going kind of sideways here for a little while too. So it had plenty of time to get in, even if it was a losing trade, which is going to happen. And 1 point at risk. I mean, it's going to be risk in trading. Obviously, you have to take some risk to have a chance to make money. But you just can't get any lower than 1 point. I mean, that's as good as it gets. Even if it's 3 points, we're okay with that, or at least that's the guidelines we go by. And you can go by any guidelines you like. I mean, that has nothing to do with the software. I mean, those are just some extra guidelines we go to keep our risk down and keep our losses small, because we know there's going to be some losses. But if you follow the signal and follow the rules that we've been talking about for years now, I mean, it just never once went under the blue dots. Now I know it's hard to stay in the trade. I get that. Believe me, I understand that part. But even if you just picked up the bulk of this, a piece of this, anything. Now, if you were following the rules strictly and had the discipline to do so, you wouldn't have been out till the red bar with the red dot. If you're trading multiple contracts, you had some great places to take some serious profit. And I mean, really, really serious money. But just trading one contract because I keep it conservative, keep, keep, keep it very, very simple. I mean, you're in over here. Technically, you're in right here at the beginning of at the close of that bar or the open of the next bar. It was within 3 points of the first row of blue dots underneath it. I mean, that's a home run right there. That's big time. And again, this could be any chart. I just want to show you the right way to read it, when to make a move. And this was a real good one here. I mean, this was 14 points. So, I mean, that's a $700 trade. No trade zone right there. Red dots above, blue dots below. Red dots is resistance that helps to block the price from going higher. Blue dots is support. And in this case, the bigger dot is the higher time frame. This is a 3-minute, 1-minute chart. So the bigger dots are 3-minute. The smaller red dots are the 1-minute. And when you see red and blue dots, on top and below the prices, just like right here, that's a no trade zone. It's a software saying, don't do anything. There's too much risk in that trade. Let's pass on that one. Take a break or move on to something else. Buy signal comes in there, stopped out right there. We gave back a point. You get right back in again right there. Very next bar, you've got that triple confirmation sweet spot, and that was a break even. That's what you're looking for, those sweet spots. Better yet, even to get in at the beginning of the trend, that's even better. As long as it's under 3 points from the price to the small blue dot, we feel it's okay to get in, because generally your stop loss will be like 1 point below that generally, so you'd have max 4 points at risk. We just don't like any more than that. You can adjust that to what you like. You can make that a little bit more, a little less. We just use that as a guide. And again, you're not going to nail all of these perfect and grab the whole 14 points out of it. Although some people had, some people probably did, and that's great. Nobody roots for everybody everybody who uses AbleTrend, everybody in this room here, and nobody roots harder than me. I mean, as much as my own trades, I just you'd be surprised. I really, really care about all this stuff more than you'd even think. And I'm not just saying that either. Sell signal right here, triple confirmation sell signal. You just got a beautiful place to take some profit. You've got to take something off when that hits that bottom band like that, especially when it goes that far outside the band. I mean, look how far from the small red dot you are when the price was down here. It's like 5 points. And when you get long bars, usually after you get a long bar, in this case you get 2 long bars in a row, boy, there's a really good chance the price is going to snap back. Keep that in mind. The best trades are when you get in on those small little tiny bars. Those work out really good, like something like here. See how a small little tiny bar? That's always going to be a better bar to enter than a long bar. Here, look, here's a long bar, kind of pull back. Really long bar. In fact, you had 2 in a row. That really snap back there. So just as a little helpful hint, try and avoid getting in on the long bars. I mean, unless it's just like a really good sweet spot right there. That's a nice sweet spot right there. The price is only like 1 point away from the small red dots. Your stop loss is just a little bit above that. Maybe not even 2 points at risk, less than a point and a half. And 3 minutes later, it just dropped really quick. Any one of these bars, take some profit there for sure. Because the further it gets under these red dots and rides along this band, the greater the chance it's going to snap back. Of course, no trade zone right there. And it's a good thing we had a no trade zone there because it kept us out of trouble. Notice how the red dots really did block or stop the prices from going higher. Okay, let me jump in and just see if there's any questions here. Okay. Oh boy, we got the whole group in here today. We've got all my buddies here. Michael, Skip, Adam, David. Wow. Bob, Andrew. Oh yeah, this is a great group. Tuesday was choppy. You're right about that, Harvey. That's why I mentioned that before. Tuesday certainly was choppy, but yesterday and today were fantastic. Tripled the losses that maybe even more than that. Doubled or tripled what we would have lost on Tuesday, made back on Wednesday and Thursday. But I've got to say there were a lot of no trade zones on Tuesday. So as choppy as it was, or as beat up as most anybody else got beat up, we didn't get beat up too bad because we had a lot of no trade zones. Harvey says, I know you recommend 3-point stop loss, but from what point? Not 3-point stop loss, 3 points from the price to the small red dot, or 3 points from the price here to the first blue dot. We keep it simple so it's easy to calculate. 3 points from the price to the first row of small red or blue dots, meaning your stop loss is probably going to be an extra point, because stop loss is always going to be a little bit under the blue dot or a little bit above the red dot. Michael, this is the AbleTrend. This is the standard chart here, the AbleTrend T2 on the 3-minute chart. And you're certainly welcome to use AbleTrend 3 for anybody who's doing very fast trading. I mean, in and out in minutes, and trading, kind of like really loading up and just looking for, a couple of points profit. I always say you can use AbleTrend 3 for that if you like. Use the always AbleTrend TS on the lower time frame, and you can put the two charts side by side if you like, and just see whichever one you like best. You're going to get a lot more trades if you use AbleTrend 3 on the higher time frame. You're going to get a lot less no trade zones. So in a real choppy market, not going to work as good. But you're only looking to make a point or two anyhow. Generally, that's the type of trading you're going to do. Oh, to do that, Michael, yeah, let me show you that real quick. What you do is you click on the AN on top, the little red letters AN. I click on the second. Mine is on the second. It could be on the first ES. It doesn't matter. But where you have AbleTrend 2 in the indicator here, you click Remove on the right side, and it will just take it off. Then you click on the drop-down box, and you add or put a check mark in AbleTrend 3, and then add it. You may have to adjust over here the size of the dot. Mine automatically go a little bit bigger, but you can see here where it says buy stop and sell stop. You can adjust the dots right there, and you could either make them like here. See the red dot? You can make them bigger or smaller right there. So just wanted to show you that real quick if you wanted to use that. You're welcome. So it's really pretty simple, But experiment, and I just give you the option of which one you like. Some people like one way better than others. It just depends. Some people like to trade more often. Some people like to get in and out more quickly. The standard is to use the AbleTrend 2. That's our standard, and that's what I have on here. I try and keep it as simple as possible. You're welcome. Andrew, can you sometime do a webinar on how to use WinTick with best practices to find swing trades like this Walmart signal? Okay, Andrew, that's actually pretty easy. You could go Tools, set up auto scan. Over here on the top left, WinTick list, U.S. stocks. And this is my favorite link here. Today's buy-sell signals for tomorrow's trade. Today's buy-sell signals. Double click on that. Then pick the price category. Okay, let's say we're going to pick 75 and above. These are updated. These are today's new recommendations for tomorrow morning. PYPL, SMH. What I would do is just jot them down on a piece of paper in front of you. In fact, you know what? I'm going to do that right now. Just give me a second. I'm jotting them down. I'm jotting a couple of them down. I'm not going to go through all of them, but I will a few. Okay, I'm just going to cancel out of these two. Go back into my daily, weekly template. PYPL. I just start typing on the keyboard. That's all I did was start typing. The box pops up. I click one frame. Here you go. You've got a new buy signal that just came in, but it's not a buy yet. You say, why not? Because this red dot is here, and these red dots only come in once per week. When you have a red dot here, that's good for 5 trading days into the future. So you've got to wait till Monday morning. If there's no red dot there, as long as this hasn't zoomed up, I like it to be within 5% of the first red dot, first blue dot. I think that's a low risk trade. Then yeah, that'd be fine. So give it a couple days. If the red dot does not show up on Monday, if there's no red dot there, you're good to go. SMH, one frame. no good. It's above the. It actually got stopped out of the other way, so you're getting close there because a blue bar might come in, but no, definitely not ready yet. Let me go one more. ACN. You start typing on the. I just click one frame. Again, close, and the box pops up. It just tells you to take a look at the chart. Doesn't mean you make a trade, but again, you got this red dot here, which you've had for 2 months now. Every week, there's been a red resistance dot that has very accurately, as you can see right here, blocked the prices from going higher. I like to, I think if it's within 5% of the blue dot, and you can use 10%, anything you like, I think that'd be super low risk. But again, just have to wait till Monday and make sure there's no red dot there. Now, if there was no red dot right here, yeah, this would be fine to get right in. These come in. This is the win ticker report. It gives you all the new buy signals so that it scans 10,000 stocks every night. And it comes in right about this time, about 2 hours after the market closes. You get a new list every day. And it's just telling you all the new buy and all the new sell signals. That doesn't mean it's a buy or sell. It just is a buy or sell on the daily chart. But then again, like I just showed you, the weekly might say, no, not yet. Close, but not yet. And there's usually a whole bunch of them every day. But, narrowing down from 10,000, if you got, 5 or 10 of them, well, that'll give you plenty to choose from. So that's how we use it. We keep it simple. And it's very helpful because it saves everybody tons of time in trying to find new stocks to trade. Here's gold. Gold had a really nice move here. And again, we're just looking for the same things on every chart. Here's your sweet spot. There's your beautiful sweet spot. Up and away it went, outside the band. Now some profit. No trade zone here. Really nice triple confirmation trade there. 10 minutes later or so, up and away it goes. Took off like a rocket. But careful with gold because it makes those sharp, fat moves. Oh, but you had some nice trades right there. No trade zone here. No trade there. There's an actually there's a really nice sweet spot, and it turns out it was a break even. So that was a good, for gold traders, that was a good one. Here's the mini NASDAQ. Here's a 3-minute, 9-minute, just to mix up the charts, show you the 3-9, which has always been our standard. At least that's what it was last year, but that's when the markets were really kind of in a narrow trading range. The VIX was at like 10, the volatility index. Now the volatility index is like, 15 and above, so there's a lot more movement in the market. And we like the 1-minute, 3-minute. But again, nothing's etched in stone. You can tweak these things or, to whatever you like. Now, first trade of the day would be right here. That's right around the 9:30 New York Open. But it would have been a losing trade because we'd have been stopped out right there. Technically speaking, we would have been stopped out. However, the very next bar, and I got to be fair about that. Actually, you know what? We might not have been stopped out there. But I'm going to assume we were because I always assume the worst. Right there, you're back in again. There's a perfect sweet spot. I mean, the bar is actually touching the blue dot. You have triple confirmation and, up and away it went. I mean, it was like a rocket ship today all day long until we were stopped out here. But, I mean, geez. That's a big time move right there. That's 20. That's every bit of 25 points. Again, if you just caught a piece of it, that'd be super. So pretty cool stuff, and up and away. I mean, the signals were just beautiful here today. Anybody using this, the signals today it was a big time day today. It says, will you get concerned if you were in a trade, then it enters a no trade zone? Do you keep your stock and wait? Yes, I would. I mean, it's probably not going to go up, but then again, it might not go down because the no trade zone means you have support below and resistance above. Remember, the small blue and red dots, they're not exit signals. They're just support and resistance. So if you're in a trade and all of a sudden some red dots come above, you're going, oh no, should I get out? Well, no, you don't have to. You can stay in. The software is saying you don't need to get out. There's only 2 ways to exit. A stop out, because under the little blue dots, or if a red bar and a red dot shows up, a red bar comes up, then we'd get out. But if the red dots are above, meaning there's some strong resistance, just means it's probably not going to go higher. It's probably going to go sideways. But technically, no, that's not an exit signal. It's okay to stay in it. You're welcome, Ed. So hopefully this was helpful. We just kind of, look for those low risk trades. Just try and have the patience to make the trades at that point, and more importantly the discipline to to pull the trigger. Always put your stop losses in place so that we're protected. Now we stay away from trading in the no trade zones, and it's just going to put the odds in your favor. You're welcome, Ed. Michael says on the daily, weekly stock chart, what time day does the weekly dot print? It comes in, I believe, on Monday, Michael, because it's once per week. It's just a week. So it would come in on, well, no, 12 a.m. The market's not open. The market opens on 9:30 Monday morning. So if you don't see a red dot there at 9:30 when the market opens, New York time, when I know you're Eastern time like I am, when the market opens at 9:30, if there's no red dot there, you're good to go. Terry says, when using the cursor tracking with a guidance chart in real time, do you know why the date and time will not stay on for more than a few seconds? No, but I don't know why, Terry, but the trick to me, like here, the trick there is just wiggle it a little bit to the left and to the right. You see the date and time on the bottom and the price to the right. I've noticed that also. It kind of pops off sometimes. If you just move it just a tiny bit up or down or to the left or to the right, it pops back up again, so you'll be able to see the number. So that's the trick that I do with that. Okay, hope that helps. You're welcome, Terry. You're welcome, Michael, Isaiah. Double click on the bar, Michael's saying. Well, that would be for the info bar, but yeah, the info bar pops up. Yeah, that's a good way to do it too. If you double click on the bar, this little info bar pops up. Yeah, pretty cool. Yeah, thanks, Michael. You taught me something. Skip says do you think the 3-minute is more accurate than the 1 minute? No, I think the 1-3 combination is, especially if you're day trading, like you are, Skip, getting in and out more quickly. I like the 1 minute, 3-minute guidance chart. The 3-9 is more for staying in the trades a little bit longer, but you got to be really patient because you don't get as many trades that way. You're welcome, Skip. You're welcome, Rick. Thanks, everybody, for being here. Hope I was helpful, and anything I can do, let me know. I'll be here to help. Have a good night, everyone. Thank you. You're welcome, Adam, too. All right. Thanks, everyone. Bye-bye.